welcome back into Market Day Report. I'm Scott Shellady, otherwise known as the Cow Guy. Thank you very much for tuning us in here. And I just got the baton from Tony St. James. We're halfway through the markets here. Now let's update you on where we stand at that halfway point. Let's take a look and see what corn's been up to. We had a little bit of a squeeze overnight, back above that $5 level. Only just. We have done better. Right now we stand at $5.25, 2 3/4 cents higher. That's March. But that's 3 cents off the high of the day. So we had been in some decent territory early. Just can't hang on to it. It's got about a 6-cent range. July corn up 3.5 cents to 5.18 3/4. While D's, the new crop, that's up 2.5 to 4.79, just 3 ticks off the high there. We'll take that board, won't we? After yesterday, we fell off that horse and we got right back on it. How about that? Soybeans, March up 11 3/4 cents to 10.43.5. A couple cents, well, 1 3/4 cents off the high of the day there, and we've had about a 14-cent range. We'll take it. July beans, 12 cents better to 10.76 even. And then finally, SEP, go all the way out to SEP, 9 1/4 cents better there to 10.58 1/4. And that's a 1 3/4 off the high there. So a decent board, solid double-digit gains in most of those products. So soybeans, we like that as well. Let's take a look and see what Chicago wheat's got for us, and it's a little bit easier. Anywhere between 2 1/4 to 3 1/4 cents lower. March is 3 1/4 cents lower to 5.88 3/4. That's going to be about 2.5 cents off the low of the day. July wheat in Chicago, 2 3/4 cents lower to 6.17. That's 2 cents off the low there. And D's, that's down 2.5 cents to 6.49.5. Now 6.49 1/4, 2 cents off the low there in D's wheat in Chicago. So we're off about 3 cents across the board when we talk about Chicago wheat. Let's go to the hard red in Kansas City. That's off anywhere between 2 1/4 to 2 3/4 cents. Something similar. March hard red in Kansas City, that's down 2 1/4 cents to 6.11.5. A 1.5 off the low of the day. We've got a July board down 2 3/4 cents to 6.35 1/4. D's, go all the way out there, 2.5 cents lower to 6.66. Now 6.65 3/4. That's a penny off the low of the day. All right, that's hard red, Kansas City. Let's go to the spring wheat in Minneapolis. 2.5 cents better there. This is bucking the trend. March is up to 6.36 even. We've got a July board up 2 cents to 6.63.5, and we're up 1 1/4 cents in D's to 6.87. And then cotton, let's see what that's got for us. Well, 24 points on a sell-off in March. 66 evens last there, 20 points off the low of the day. May is down 24 points. To 67.44, let's bring him in. Peter Haralambakis, he's with CHS up in Invergrove Heights. Have I seen you once already this week? Is this our second time? We got to stop meeting like this.
I think we've reached our quota for the week,
yeah,
Scott.
We're all good.
That is correct.
All right.
Yeah. Again, even though we've reached our quota, seeing each other, we're not too, adherent to and paying attention to, or disregarding some of the volatility that we're seeing in the grains market itself, right? So, on an annual basis here, with corn rallying a good 9% since the first of the year, soybeans up about 5%, wheat up about 12%. Now the question lies in the all-encompassing tariff conversation that surrounds everybody's table. Well, what's going to happen, right? Further kind of tariff talk along the lines of lumber, peppering some of the headlines today. But again, remind many of our folks out there that we can't necessarily overthink some of this anticipated tariffs or trade wars until they actually happen, right? So until some of those details come out, we await and just hang on to the long, upward trend that we're seeing in a lot of these grains, right? So that's all we can do.
I mean, that is all you can do. And, the CEO of Walmart said it today, too. Look, whatever's going to happen is going to happen. We'll try to manage it the best we can, but it's hard to get out in front of it because you have no idea what's going to be next. And I think that's fair. And I also think that things have really held up pretty well considering what may or may not be happening.
Agreed.
Would you agree?
Yeah, agreed. And in our world, in the commodities world, the whole goal here is locking in margin, right? Well, where can I lock in margin? Where can I sell that corn at a better basis? Where can I capture some of those numbers that we talked and discussed in our budgetary meetings, right? So when you're seeing and talking about 9-10% rally in corn, hey, that's one of those conversations like, where do I need to hedge? Where do I need to protect, regardless of what's happening out there, right? Would you rather have and lock in 10% and not, you don't want to miss the boat on the pullback, depending on the uncertainties surrounding there? That's probably the route to take inevitably, right? It's all about locking in where you can. And to your point, it sustained this rally with a lot being thrown at it in a short period of time, right? Yeah. So ideally, you just lock in where you can.
Great stuff as usual. Thank you very much for your help, Peter. Peter Haralambakis coming to us from CHS up in Invergrove Heights. Well, big words. Minnesota. We're going to go away. We're going to pay some bills. We're going to come back and talk more livestock with a guy in a cow jacket right after this.